While Wyckoff trading method can provide you with some really fantastic and unbelievable entry points into the markets, if you are using it for just this purpose alone, you are grossly underutilizing the potential Wyckoff trading method has. In this video, I am going to discuss the common traps that traders fall into while they are trying to incorporate the Wyckoff trading method in their trading arsenal. As we know that Wyckoff market cycles and schematics break down the market action into different market cycles and phases, which then you can use to make sense of what exactly is market trying to do here. And based on which phase or cycle the market is in, you can choose an appropriate trading strategy. Now, if you missed my previous video, I will link it up somewhere here where I discussed application of Wyckoff trading methods to Nifty and Bank Nifty charts. So let us start with the 10 things that you must not do if you're using the Wyckoff trading method. And the first one is, don't look only for entries and exits. If you have a myopic view and just look for entries and exits, you will miss some really crucial information that this method is giving you about the markets. The second most common mistake that traders make with Wyckoff trading method is they rush to complete the Wyckoff market cycles and phases that are forming in the markets. Now, if you do not let the market complete its development, it will lead to some premature decisions in the markets that will take your trading in the wrong direction. Third thing that traders often do incorrectly is they will not wait for the markets to confirm whether a particular market phase or cycle is complete or not. And once you learn to wait patiently for these signals, that is when your trading will change. So let markets tell you when it wants to complete a certain cycle or phase. Fourth thing is, never jump into a trade in anticipation of completion of a particular phase or cycle. What happens is, traders, they will get impatient if they are looking at a chart and a nice clear Wyckoff market schematic is setting up, or a Wyckoff market cycles are clearly visible on the chart. They will get very excited, and what they will try to do is they will try to get into trades before the confirmation is there. The phases, instead of completing, they will start expanding, they will start prolonging, and what will happen is you will get stuck into a bad trade. Fifth most common mistake is, I get this question very often. Traders will come to me and they'll start asking questions like, can I apply Wyckoff trading method on a smaller time frame chart, maybe an hourly or a 4-hourly chart? And my answer is always the same. Wyckoff trading method was designed to capture bigger market moves on higher time frames. If you try to apply it to shorter time frames, you will land yourself into trouble. Don't do that. It is not a good idea. Sixth thing is that if you really want to take benefit of Wyckoff trading method, you will have to wait patiently till the E phase begins or the D phase is about to complete. And as I have said in my previous video, that I tried to trade after the completion of C phase, where the testing action finishes, I would like to jump into trades, and that is very similar to catching up top or a bottom. And by the time I realized that, okay, this is not the correct way to apply Wyckoff trading method to the markets, I had already paid a heavy price. Seventh important point is, you need to focus on the trading behavior or a trader's behavior behind a certain Wyckoff market cycle, phase or pattern or whatever you are tracking. See, what chart pattern forms is not important. What is more important is what kind of insights that chart pattern gives us about the trader's mentality develop. So if you can understand the psychology behind why traders are doing certain thing at a certain point in time, you will have a much better time understanding the markets and then using that understanding into finding some good trades going forward. So the eighth thing, I'll repeat it again here. I've already said this, but I'll say it again. Never try to catch the tests that form on the chart during the C periods. it looks extremely exciting to catch a successful test, because that is virtually the bottom for that particular chart pattern, and then actually that is the point where the real up move starts in hindsight. That is the major cause of frustration for traders, not waiting for the D phase to complete and just jumping onto the C phase. Don't do that. Ninth point, it's kind of a common warning that don't focus on individual Wyckoff patterns on stocks. All right, so let's say you're trading stocks and you find a good stock and it's forming a certain pattern, and if the broader market is not supportive, I think it is a warning sign and you should not pursue that pattern. So let's take an example of a banking stock. So let's say you're trading HDFC Bank. You find a good Wyckoff pattern developing, and then the C phase test has finished and then we are forming what looks like a D phase, an absorption of supply. But when you look at the Bank Nifty chart, it is definitely not supportive. In that case, it becomes really difficult to trust the individual stock pattern against what the broader market is telling you. We are trying to trade with favorable probabilities. Even though we are giving up on individual opportunity, what we are trying to do here is trying to increase our chances of taking profitable trades over a period of time. So if you get stuck into individual chart patterns, always trade into stocks that are in sync with the broader markets. And the last point, the 10th point that I would like to make here is, don't compare this method with any other method. That is very, very bad habit most of the retail traders have, because if you are comparing it with some other method, then it is very clear that you have a bias in your mind. Now, I'm not saying which method to choose. If you want to use Elliott wave, you can use Elliott. If you want to use price action, you can do that. And you can combine Wyckoff with those methods. That is an absolute possibility. But what you should not do is compare the two methods, because according to me, Wyckoff method is probably the oldest one which has stood the test of time. And more importantly, Wyckoff not only used his own market understanding, but he also looked at some of the most successful traders of his era, and he observed their actions in the markets to come up with, the logic that has stood the test of time over a century almost. I have tried almost every trading method under the sun. I have tried it, I have failed at it, I have learned many things from it, and then when I discovered Wyckoff, I have found myself on the right side of the markets more often than not. So other methods, while they were good, they did not answer all of my market related questions. But when I found out Wyckoff, when I found out auction market theory, when I found out innovation adoption curve, all these core trading philosophies have answered my questions that stopped me from making progress in my trading. That is why I believe every trader must use the Wyckoff trading method. Now, if you have any questions regarding this, don't hesitate to put it in the comments below and I will get back to you immediately. If you like this video, give it a thumbs up, share it with your friends and colleagues. And if you haven't yet subscribed to our channel, please do so that you can get notified of all the future videos I am going to post. Thank you for watching this video till the end, and I'll see you in the next one.